This is the Asia Trade. I'm Haidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Germany's Conservative opposition leader is set to form a coalition government after Sunday's election win. Results suggest that the far-right AfD party will come in second and the Social Democrats in third place. The Trump administration is said to be pushing Mexico to impose tariffs on Chinese imports to avoid US levies. And Australian Treasurer Chalmers heading to Washington, where he's expected to press US officials for a tariff exemption. Take a look at how we're setting up. Of course, politics and geopolitics are front and centre this Monday morning as Asia wakes up and comes online for a new week of trading. We are already seeing a bit of downside there in the first few moments of that staggered open here in Australia. The ASX 200 is widely expected to fall. We're seeing that downside, but of course needing to give that market a little bit of time to come online there. We did see some data when it comes to New Zealand retail sales rebounding, and a sign that perhaps the recession has ended as the RBNZ continues, as we saw last week, to ease quite firmly. Chicago Nikkei futures looking like this at the moment. We are expecting just a bit of a risk-off sentiment there, expecting to fall after we had Wall Street's worst session of the year. We are certainly seeing equity index futures for Hong Kong also declining there as well. S&P futures up by just about 0.1%. Taking a look at European assets, because that's clearly where the focus is. We saw the euro strengthening following that German election. We did see the US dollar, though, conversely trading pretty mixed against other major currencies. When it comes to sovereign bond yields, we're seeing a decline there in Australia and New Zealand. But of course, top of mind is really what we're watching when it comes to Europe as we get that election result, with German Conservatives really sealing the election result, with the far right coming in second. And this coming, of course, at a time of enormous geopolitical pressure and trade pressure from the United States under the Trump administration as well. Well, Germany's Conservative opposition leader, Friedrich Merz, says he'll form a new coalition government within the next 2 months after projections suggested that he won Sunday's federal election. His bloc is expected to finish ahead of the far-right AfD party and Chancellor Olaf Scholz's Social Democrats, which saw its worst result since World War II. Let's bring in Bloomberg's Oliver Cook, who joins us now from Berlin. And Oliver, great to have you with us. And I guess give us some context in terms of how surprising, unsurprising the aspects of these results that we know so far are.
Yeah, so listen, I'd say overall this is a sort of spectacularly unsurprising outcome, because the polls basically since November have been basically dead the same, and the outcome was more or less as anticipated, though there is some nuance within that is worth kind of unpacking. What happened here is that we had the CDU coming in, getting 30%. They are by far the largest party in Germany. This will give them this sort of initiative in order to build the next government. The SPD, as you mentioned, the Social Democrats, Olaf Scholz, that is the current chancellor of the country, coming in with his absolutely worst result basically in history that this party has ever seen. And of course, one of the main features of this election campaign has been the presence, and the very active presence, of the AfD, the Alternative for Deutschland, the far-right group, which got 20% of the vote thereabouts, and really the first time they ever put up a chancellor candidate. What happens now is the very sort of difficult part of the thorny negotiations to build a coalition. They need to get more than 50% of the votes. We're still counting to the last few thousand votes, and actually as a function of how many of these sort of votes actually voted for some of the smaller parties, these parties could get knocked out of the parliament and fundamentally change the arithmetic of how many parties could lead the country. So basically what we're trying to find out now is if the CDU will have to enter into coalition with more than one party. Ideally, potentially, what they would like to do is have a CDU, SPD lead the country next, but that'll also be determined over the next couple of hours until we get those very sort of last votes.
What will be the top priorities for the new government once it's formed?
Yeah, so listen, one of the sort of main election issues going into this has been immigration. This is the AfD, the Alternative for Deutschland, the far right. This is something that they really sort of pushed very hard in the agenda, and it has forced the CDU really to tack to the right. But really before everybody here in Germany, as we've been reporting over the last few months and years, really, it's been 2 years of consecutive contraction in Germany. The business model really not working out, and they're staring down the barrel of 25% tariffs from the United States on the auto industry, which would basically guarantee a third year of contraction. 3 years in a row has literally not happened since the end of the Second World War. So that is sort of one of the dire situations that Germany is looking at. I caught up with one of the senior CDU lawmakers when I was at the headquarters a little bit earlier this evening. Have a listen to what he said their priorities would be.
We do have a very clear mandate. Friedrich Merz will be our next chancellor in Germany. Olaf Scholz is done. And that's the good news of tonight. And we're going to change course of Germany. We will bring back growth. We will end illegal migration. We will meet our security needs, especially regarding to NATO goals. So yes, that's a clear mandate for a change of policies.
So again, the economy front and center, they really want to deploy their economic agenda. But again, this is German politics. These things don't move so fast. So ideally, if they can get that government sort of formed within the next 2 months, that would be great. But of course, they need a leadership here because as we know, Trump has been president of the United States for 1 month. There is so much that has been happening. And now in Germany, the biggest economy in Europe, will be without a government for another 2. That is something they really do not want to do. They really need to get this sort of a process in motion if they're going to meet the challenges of the day.
And as you allude to, Oliver, it comes at a point of sort of existential crisis for Europe, right, with that withdrawal of potential US support. How does the potential government, the new government in Germany, once it's formed, you know, what is their sort of, I guess, perspective and strategy in being able to navigate that amongst the European leaders?
Yeah, so listen, I spoke to a couple of CDU lawmakers about this very point. Basically, how do you handle the relationship with Trump? And listen, they say they want to be a bit optimistic. I mean, Trump tweeted about the election victory of the CDU in the United States. He was sort of positive, generally speaking, that the country voted more to the right. So, you know, potentially they take that as a positive tea leaf. But really, at the end of the day, the question is, and we heard this from Friedrich Merz in his sort of, you know, in his speech, a victory speech tonight, saying that basically they need to create unity within Europe. And there's an absolute priority to make Europe as independent from the United States as possible. So for every European leader, this is a very front and center sort of topic here. And we should say, Friedrich Merz spent some time in European Parliament. He is a big Europhile. He is in favor of sort of potentially bringing things together at the European level. But I think one of the main issues that we're going to be watching in Germany and at the higher sort of EU level, for Germany, it's the question of the debt break. There are these absolutely draconian sort of debt limits that the Germans have imposed on themselves. Are they going to be willing to shift those in order to meet their obligations, namely on defense? I think the consensus is on yes, they will. Will they go further in order to stimulate the economy and potentially build out infrastructure? But of course, Heidi, the big question, the holy grail for Bloomberg and for everybody who's watching the sort of European politics and sort of fiscal policy is, would the Germans potentially get on board with the concept of joint European debt, specifically in trying to build out that defense capacity? Because as it stands, you know, the German military is in sort of shambles. It has been underinvested for a very long time. And as the sort of reality of in America that may not come to defend the Europeans, this is something that is a present conversation in all the capitals of Europe.
Bloomberg's Oliver Croker there with the latest in Berlin. And of course, it's not just Germany, it's not just Europe coming under pressure from the Trump administration. It is also China. And we're hearing that the administration is said to be turning up the heat on Mexico to place their own duties on Chinese imports as part of their efforts to avoid threatened duties from the US. Let's bring our Chief North Asia correspondent Stephen Engel in Hong Kong. And sort of, Steve, this it really extends the complicated web of how we know that tariffs, not just tariffs, but counter tariffs, but also, you know, tariffs on these other trading partners and the pressure that they're under is coming out to play now.
Yep. And we're trying to shed some light as well on what kind of negotiations, if you want to call them that, are going on behind the scenes as we head into a very critical week this week. Keep in mind that Trump's threatened tariffs on its two border nations, Canada and Mexico, were originally threatened to be enacted February 1st, delayed by a month. So that would be essentially, what, Saturday is March 1st. So this could be a very critical week leading up to the potential imposition of 25% tariffs on Canada and Mexico. And in Mexico in particular, we do know that there is a Mexican delegation in Washington, D.C. right now, and sources are telling Bloomberg News of the details of one of the U.S. demands, as you rightfully said, that the Trump administration, according to these sources, has told these Mexican officials, which includes the economy minister, Marcelo Ebrard, that they should put their own tariffs on the Chinese imports to Mexico as a part of their efforts to avoid those threatened U.S. tariffs of 25%. We know that, according to these sources, the new Commerce Secretary, Howard Lutnick, along with USTR nominee, the U.S. Trade Representative, Jamieson Greer, as well as economic advisor to the White House, Kevin Hassett, were also in these meetings. And essentially, we didn't get any confirmation from any of those departments or from the Mexican delegation, other than the economy minister of Mexico had a post on X saying that the meeting was the start of a constructive dialogue and that a joint task force or a work group would begin today. So this week is critical.
We've also heard that Trump is boosting the muscle, the authority of CFIUS, right? There's, of course, a committee that scrutinises a foreign entity investment into the US, and this is very much firmly focused on Chinese investment in some of these critical industries and infrastructure. What do we know, and I guess how impactful could this be?
Well, it could be very impactful, obviously. This is something that Trump signed, I believe it was on Friday. This, what do they call it? The Committee, well, obviously we know the Committee on Foreign Investment in the United States, that's the CFIUS. But basically there was a national security presidential memorandum that Trump signed on Friday in Washington, D.C. And I'll quote, authorizing CFIUS all necessary legal instruments to bar Chinese affiliates from investing in U.S. technology, critical infrastructure, healthcare, agriculture, energy, raw materials, and other industries. And you rightfully said the word muscular. Basically, it's just another step to add more muscular use of CFIUS to thwart Chinese investment into the United States. You're seeing there a port footage in the United States, actually Seattle. Trump wrote that the PRC does not allow U.S. companies to take over their critical infrastructure, like ports, and the U.S. should not allow the PRC to take over U.S. critical infrastructure. Essentially, he mentioned technology, food supplies, farmland, minerals, natural resources, ports, and shipping terminals. Also, in this memorandum, the U.S. will consider new or expanded restrictions on basically U.S. investments into China. So that is a key point of discussion that are going to be coming up not only next week when the National People's Congress gathers in Beijing to discuss the domestic policy response to these threats from the United States, but also after that, subsequently after that, we have the China Development Forum in Beijing, where you get usually, traditionally, lots of foreign business leaders. In years past, including last year, Tim Cook has been there. Other pillars of U.S. industry have gone to the CDF behind closed doors at the Diaoyutai State Guest House for very critical discussions. I think this year is going to be even more interesting, followed on by the Boao Forum in Hainan Island just a week after the CDF. So this is going to be a key topic about what policies are coming from the United States and reciprocal policies from China to potentially restrict investment in each other's countries.
Our Chief North Asia correspondent Stephen Angle there. Well, Australian Treasurer Jim Chalmers is in Washington this week to try and win exemption for the country from US tariffs as well. Paul Allen joins us now for more, and there's so much jostling, right? It's not just about, obviously, getting that trade exemption, because the government could really use a win right now.
They absolutely could. There's going to be an election in Australia soon, before May 17. The date hasn't been called yet, but yeah, a win would be great, particularly one that looks after blue-collar workers. Now, Australia's trade relationship with the US is a little bit unusual in that Australia runs a trade surplus with the US. And then we have comments like Peter Navarro made last week, the US trade representative, saying that Australia's aluminium industry is killing the US market. Well, there's a lot of contention over that, because if we look at government data from 2024, only 2.4% of Australia's aluminium exports went to the US. The Rio Tinto CEO waded into this as well, saying, look, after the outbreak of the war in Ukraine, the US asked us to send them more aluminium to replace those shipments from Russia that were disrupted. Also, Australia has a $2.6 trillion pensions industry, that's US dollars, and a fifth of that gets invested in the US. So Jim Chalmers has got some compelling arguments when he gets to DC.
There's also some geostrategic worries at the moment as well over these Chinese warships. Beijing thinks it's a bit of an overreaction.
It does. A few hundred kilometres in that direction over Friday and Saturday. We had 3 Chinese warships conducting live firing exercises, and that forced a number of flights between Australia and New Zealand to be diverted. Now, Anthony Albanese says, look, the Chinese military was operating in accordance with international law, but he said it would have been appropriate to be given more warning. China says Australia was hyping things up and being inconsistent with the facts. Well, if you want hyping things up, the opposition defence spokesperson said Anthony Albanese didn't go far enough. The opposition's accusing China of gunboat diplomacy. Now, if you consider where this ocean is, the Tasman Sea between Australia and New Zealand, there's nothing there. There's no other countries around. It's a very, very, very long way from China. The former senior defence official Michael Shoebridge summed it up very nicely. He said there is no rational reason for the PLA to be there except to send a message of intimidation, aggression and provocation.
Bloomberg's Paul Allen there with the latest. But we have more coming up on the Asia trade. Moody's analytics explaining why they think the US economy is losing some of its luster. The author and historian Katja Hoyer will be joining us to give us her thoughts, I should say, and insights on Germany's recent election result. SBI Investment will be joining us a little bit later to talk about how China-US tensions are shifting attention towards Japanese opportunities. Much more ahead. This is Bloomberg. Let's take a look at the week ahead. And the Bank of Korea will be taking centre stage on Tuesday. Bloomberg Economics expecting that the central bank will resume rate cuts in the face of mounting growth risks. On Wednesday, the Bank of Thailand is expected to keep their rates unchanged. We're also getting a range of economic data this week, including inflation here in Australia, Japan's activity data, plus Tokyo CPI as well. And on Friday, markets will be watching the Fed's preferred price gauge, which is expected to show signs of cooling. Joining us now is Katrina, who's a Director of Economic Research at Moody's Analytics. So, again, we sort of are at the point where these data points are only part of the picture, right? So if we start off with the Fed, you say that there's some signs that the economy there is kind of losing its luster. How much of that is a structural element, and how much of it is what we've seen perhaps from, policy and sort of the politics recently?
Yeah, it's an interesting conundrum that we're in at the moment, because you're right. On the one hand, you've got the activity data that we saw for January coming out of the US. It did look like the economy has lost some of its momentum. GDP growth is tracking more at around 2% as opposed to the 3% it was tracking last year. But at the same time, policymakers are treading this really difficult line, because they've got the economy losing momentum, but then at the same time, a lot of President Trump's policies, at the end of the day, however you slice it, they're inflationary. So they're not sure how to tread forward. We know that there's going to be fewer rate cuts this year, but we don't know exactly how many more cuts, just because of this policy uncertainty that we're dealing with.
And it's not just the Fed, right? Obviously, the US being the originator of a lot of the policy uncertainty, but you see even from the news flow today, pressure on Mexico to, put its own tariffs on China, how that affects the rest of the world as well. It's a pretty tough time for central bankers.
Oh, it's a tough time as well on the fiscal side of things as well, because you just don't know how aggressive Trump is going to be, and then what the reciprocal is going to then result in. And I think what we need to remember at the end of the day, there's a huge gap between what Trump says he's going to do and then what's actually implemented. And that gap is a source of a huge amount of anxiety. We're seeing that play out in markets as well. So then trying to be a central banker and deliver policy that has an impact not just today, but 6-12 months down the line is incredibly difficult, because the policy landscape is highly uncertain, not just from an economic point of view, but also from a geopolitical point of view as well.
Yeah, which sort of made last week's RBA decision and the conversation we had with Deputy Governor House super fascinating, right? Because, he made the comment that they thought if they didn't cut last week, the chance was that CPI was actually going to undershoot. It must be hard to come to consensus in a room like that, trying to work out all the different modelling around scenarios.
Oh, definitely, because you've got all these different, very talented, highly intelligent individuals putting weight on certain different aspects of the uncertainty that they're dealing with at the moment. And so I think what we can take away from what's happening in the RBA and also globally with other monetary policy decisions is that, sure, we're in an easing cycle, but it's a more gradual easing cycle than what we previously anticipated, because inflation is tracking higher. And at the same time, we're going to see fewer rate cuts this cycle. So that's a situation for Australia, but also globally as well. So what that means consequently is we're not going to see that, strong rebound in domestic demand that we had previously anticipated from monetary policy no longer being in restrictive territory. And then at the same time, because we're dealing with this heightened uncertainty as well, that's keeping businesses more cautious, that revival in investment isn't coming as strong, and also households are proving more cautious as a result as well.
Confidence is certainly an issue for Korea. Do you think at this point it's a pretty straightforward path for the BOK?
I think the one thing we can say is that unfortunately nothing is straightforward at this point. So for Bank of Korea, it's a really difficult balancing act that they've got at the moment. So we have seen that consumer confidence has improved since the political uncertainty that really reached a head in January, and so that's a positive thing. But at the same time, they're also still balancing a weak currency. But what they're prioritizing at the moment is trying to revive domestic demand, because they know that important manufacturing and export channel is going to have a more challenging run this year.
How do you feel about China at the moment?
It's hard to be optimistic about China at the moment, because what we know is that the strong part of their economy has been that manufacturing export side of things, and domestic demand just can't really get a foot in. And so we know that policymakers are directing an increasing amount of stimulus to try and revive household spending and businesses. But if you can't, change the underlying reasons why households aren't spending, then it's difficult for stimulus to actually be effective. So we're knowing that local governments are being directed to increase, and bring forward spending this year. The fiscal deficit's likely to increase to around 4% from that 3% of GDP last year, but it's still an incredibly difficult time for China. And I think with the uncertainty that comes from that trade and tariff policy, where China is a clear target for the US tariffs, then it's going to be really difficult for China to continue to muddle through as it did last year.
I wanted to draw back to, we started the conversation on Australia and the RBA. How big is the inflationary kind of messiness potentially, given that we are expecting more election year spending both on a state and federal level?
Yeah, and I think that's the exact problem that we have here, right? So domestic inflation is not cooling as much as we'd like it to cool, and part of that is to do with the resilient labour market, which is a positive thing, but at the same time we are coming up to this election in the next couple of months where we will see a flurry of spending from both sides being promised. So that does mean that inflation isn't going to cool as aggressively as what the RBA is looking for it to cool. And then at the same time, we need to remember the Australian economy is a price taker, not a price maker on the global stage. And so because we've got global inflation tracking higher, Australia is of course going to inherit some of that at the same time as we're dealing with a weak Aussie, which is going to add to imported inflation. So it just, all those factors combined mean that we shouldn't expect more rate cuts this year. We should expect a very shallow easing cycle.
Katrina, always great to have you with us. Katrina L, Director of Economic Research at Moody Analytics. More ahead on the Asia Trade. This is Bloomberg. Take a look at one stock we're watching. We're just about half an hour into the start of trading here in Sydney. WiseTech off by about over 18% at this point. We have had almost every board member quitting in a disagreement over WiseTech's founder and the largest shareholder, Richard White's role at the company. We're seeing that big reaction when it comes to the share price. But Richard White appears to have on one level triumphed when it comes to this high-stakes, high-power dispute after almost every board member have quit in disagreement. We had seen shares slumping as much as 23%. Revenue expected to be at the bottom of the guided range as well, caused by the viability, doubts over the viability of his role. More ahead on the Asia Trade. This is Bloomberg.
We ran a very tough election campaign. Nevertheless, this election campaign was really necessary. Also in the debate about the important and major issues of our country, about economic policy, migration, foreign and security policy, and internal security. But now we will talk to each other, and the most important thing is to reestablish a viable government in Germany as quickly as possible.
Germany's Conservative opposition leader Friedrich Merz said after his bloc was projected to win Sunday's federal election, of course, so a lot of uncertainty there in terms of the timing and the formation of a coalition government. The CDU-CSU bloc won 28.8% of votes, followed by the far-right Alternative for Germany party at just over 20%, the Social Democrats at 16.2%, which was really the worst result for the Social Democrats since World War II. Take a look at the reaction that we see in the euro there as well. We'll be focusing on euro-yen in today's session. Extending lower will really be kind of the main platform that traders will use in the Asian session to kind of express that view on the Conservative win in Germany over the weekend. Let's get some more analysis on this election result. Joining us now from Berlin is Katja Hoyer, who's the author of Beyond the Wall, A History of East Germany. Katja, really great to have you with us. And it's funny, we were talking to our correspondent earlier from Berlin saying this is the most kind of almost spectacularly expected result that we had over the weekend, and it certainly does, at first glance, really reflect the election trend that we've seen over the past year in so many other democracies.
It does indeed, particularly with the rise of the far right, but also the win of the Conservative Party. If you take those two together, you basically end up with a pretty great majority, large majority for sort of centre-right to far-right politics. And this has been driven by, as you say, the same trends we've seen internationally, particularly a scepticism towards immigration, but also a sort of sense that the economic policy of the country needs to change.
How challenging or how easy is this formation of the coalition going to be, and the ability for these parties to find common ground when it comes to policy direction and consensus?
It will be very difficult because the Conservative Party that won the election has basically ruled out to work together or form a coalition with the far-right AfD party. So this only leaves them, the centre-left party and the Greens, really, to try and form a majority with either one of the two. So that's what they ideally had in mind, just one other coalition partner, but it might take two, depending on how the results pan out over the next few hours. And this is quite difficult because they basically promised quite big changes, and that's what they basically won the election on. And at the same time, they might have to get either one or both of the current ruling parties that are deeply unpopular with many voters back into the government.
At the same time, we're seeing these sort of political fringe parties doing well, right? We've already talked about the success of the AfD that roughly doubled its vote share from the previous election. We've also seen advances being made by the far left party as well. What does this tell you about, how voters are feeling, and does it concern you that we're seeing kind of both ends of the spectrum perhaps making more advancements than the more centrist parties?
Well, I think what we are seeing is a kind of rejection of the status quo, and that voters aren't entirely sure how to make that voice heard, those concerns heard. So they've turned to newer political parties who, some of them have only come about in sort of recent years, including the AfD, which was only founded in 2013. So what I think this means isn't necessarily that voters have become more extreme or that they are kind of radicalizing themselves. I think what it means for the mainstream parties is that they need to listen to that and think about why that's come about very carefully, and then try and form sort of moderate but, kind of effective policies to try and address those concerns, to try and win trust back into the system and the mainstream parties. I think the voters haven't gone sort of off too far in those directions. I think many of them would rather vote for parties that they have voted for in the past. But they need to see that their concerns and their worries are listened to.
You've talked about the challenges in the formation of this coalition and how perhaps effective policy making and direction will be. Do you look at this and think, well, obviously Germany and the rest of the EU are kind of at an existential crossroads in terms of the pressure from the US and the relationship with Russia there. Does this coalition kind of have the means to be able to provide that leadership within the EU?
Well, I think a lot of the countries that surround Germany, and including some of its sort of international partners as well, would like to see a stronger stance from Berlin and a clearer sense of direction, not least because of the economic weight that Germany has got as one of the world's largest economies. But I think the problem is that whatever party the Conservatives end up governing with, they all have fundamentally different ideas as to what Germany is, what place it's got in Europe and in the world, and to try and tie that all together into one coherent vision so that leadership can emerge from that is going to be a huge challenge for the Conservatives themselves, but also for their future coalition partners. So they will really have to sit down and try and think beyond party politics and perhaps even beyond their own, sort of traditions of thinking about Germany.
And is part of that rethinking when it comes to military and defence investment? What are you expecting on that front?
So that is one of the areas where there are quite differing visions out there. So the Conservatives have been quite clear about the fact that they want to slowly increase defence spending, certainly beyond the 2% of GDP that NATO requires of its members. But it's not entirely clear where the money for that is going to come from, because they're also fiscally quite conservative and basically want to avoid making additional debts or creating additional debt to do that. Whilst the centre-left party, with whom they'll probably have to work together, has basically said it doesn't want to cut down on, for instance, welfare spending or other kind of social policies. And so if more money is to be spent on defence and on security, Germany will have to take on more debt. So that's already a fundamentally kind of different idea as to where the money for that is going to come from.
You talked about many Germans speaking of this idea of an election of fate going into the weekend vote. Do you think, on the balance, we're sort of left with a Germany where policy making remains less certain than before?
Yes, I think there was a sense in the build-up to this election that this really is a fateful election, and many people were expecting, sort of quite big changes to come out of that. And I think it depends now on whether any sort of coalition that comes out of this can actually deliver that. If not, then I think it could prove fateful in all the wrong ways, in that it may be the election that brought about, the first real change towards the political fringes becoming big political players in Germany. One of the Conservative leaders today made quite a grim prediction, and he basically said if we don't get a grip on this, then in the next election we may see that the fringes together hold the majority of the seats in Parliament. And I don't think that's an exaggeration. I do think it needs to be the case that basically in the next few months they need to convince voters that this was a fateful election in the right way, and that it set Germany onto a path that can make Germans and perhaps Europe as well feel more optimistic about its future than it has been doing in recent months.
Katja, really great to have you with us. We appreciate your insights. Katja Hoyer, who's the author of Beyond the Wall. Some of the other stories that we're following this hour, and Ukrainian President Vladimir Zelenskiy has said that he's willing to step down if it means peace and NATO membership for his country. Zelenskiy says it's clear he wouldn't be in power for decades, would happily make that trade if the offer was made. Meanwhile, Bloomberg has learned that Ukraine is pushing back on US demands for a $500 billion fund as part of a deal giving Washington a cut of its mineral wealth. The fund would compensate the US for its assistance to Ukraine, but a source says Ukraine argues the actual amount is about 5 times lower. Prime Minister Benjamin Netanyahu says Israel won't allow the new Syrian administration to push forces into the territory south of Damascus. Netanyahu says the new regime must demilitarize in southern Syria. Israel advanced eastward into Syria after the former government was overthrown by rebels in December. Israel says the move into the buffer zone is temporary. The Trump administration sent emails to more than 2 million federal workers ordering them to report on what they did last week or be forced to resign. The deadline to reply is just before midnight in Washington on Monday, and in a social media post, Elon Musk said the directive came from President Trump. However, several agencies, including the FBI, NASA and the Pentagon, have asked employees to hit pause on acting on the directive. Musk's government efficiency team is also moving to shut down the Consumer Financial Protection Bureau, raising fears among some Trump allies that it's moving too fast. Hundreds of workers have lost their jobs at the CFPB since Musk vowed to, quote, delete the agency. Pope Francis remains in critical condition for a second day as he continues to battle severe pneumonia. The Vatican says the 88-year-old pontiff is still receiving high-flow oxygen to help with his breathing. Some blood tests show an initial mild renal failure, which is currently under control. The Vatican says the prognosis remains what it calls reserved, and added that the Pope continues to be alert and well-oriented. More ahead on the Asia trade, this is Bloomberg.
Global investors are increasingly shifting their focus to the Japanese VC space as the country sees a growing trend in startup funding. Data shows the amount of funds startups raised peaked in 2022 and fell last year, but it's still 5 times more than that of 2014. A government report estimates that while the number of Japanese startups are growing, unicorn firms with a market value of over $1 billion remains limited compared with other countries. Let's get more perspective on where the investment opportunities are with SBI Investment is the VC arm of SBI Group and is one of the biggest funds in Japan, having invested in over 1,200 startups in the last 25 years. Joining us in Tokyo is Shohei Yamada, who is a partner at SBI Investments. It's really good to have you with us here in Tokyo while you can, because you're also moving very soon, right?
Yes, thank you very much.
You're going to Seattle?
Yep, thank you very much for having me like this. I'm pretty honored to be here.
Yeah, so what are you going to do in Seattle? Tell us a little bit about what is this drive of your company to sort of, is it a move to bridge Japan and the U.S., especially when it comes to capital flows?
Exactly. So I'm moving to Seattle from March 1st, and I'll be a head of SBI USA Holdings. And then at the same time, I will run a new fund, and then I will run a new kind of acceleration program over there in cooperation with Plug and Play.
How big is the interest right now in Japanese innovation?
Actually, we are pretty serious about how to foster a great startups from Japan to all over the world. Because let's say, looking back to 50 years, 60 years ago, we kind of succeeding in fostering Japanese great startups like Toyota, Honda, Hitachi, or whatever. But we have to do it one more time to increase the economic growth as much as possible.
Why does it matter that you're doing this now? I mean, we've had so much sort of economic stagnation in Japan. Have the tides turned finally, and is this sustainable?
Yes, so when I was in New York, what I learned from the experience is that the dynamism of American economy is created by startups, backed by venture capital especially. So at this moment, we have to support Japanese startups as a venture capital as much as possible. And then I think the only one institution, only one kind of economic animal who can create dynamism or creativity or innovation is startups, I believe.
How much leeway do Japanese firms have in creating and really fostering this innovation when at the same time we know that Japan is very bureaucratic, there's a lot of red tape?
Yes, thank you so much. I have to admit that is true. But I really feel like the younger generation is more having a different kind of way of living. So what I can clearly see from joining SBI Investment is that what I can call like third wave, the Founder 3.0 is coming. So Founder 1.0 is that kind of outlaws, I have to say. Mm-hmm. The second wave is like the founder with higher educations. The third way is higher education with international sense or fluent English speakers. This one is changing Japanese startup scene.
I mean, your English is amazing, but that is another issue here in the country, isn't it?
It's totally true. It's totally because I'm in charge of any kind of investment from America to Africa, I can say. So when I was in Kenya, Nairobi, or Nigeria, Lagos, I'm pretty surprised because almost all the kind of guys can speak English, and then there's no English barrier, and then which means almost nothing about language, cultural barrier too. So I think that we need a guy like a venture capital, big corporate who can be the bridge between overseas companies and Japanese stuff. At the same time, Japanese companies have to speak English if you want to be a global one.
Will the macroeconomic environment be an issue? It seems that the Japanese economy is finally seeing some revitalization, but at the same time, the weakness of the Japanese yen, how does that really affect investment flows?
Exactly. So we clearly see it's pretty weak Japanese yen, but at the same time, if we think about manufacturing something from Japan and export the item to overseas, I think we are in a good positions, especially deep tech or manufacturing company.
When it comes to investing in other countries, does it become more expensive and difficult?
Yes, I have to admit it. But I found a great company that is called Terawatt. Is innovative electric battery companies. They have a headquarters in US, but the R&D and manufacturing place is all based in Japan.
Oh.
They keep kind of competitive by that.
So tell us a little bit more about those sectors where you're seeing opportunities.
Actually, I invested in fusion companies, semiconductor companies, and then kind of OS companies. So I really like to invest in deep tech. But what I can see from the beauty from Japanese market is that, for example, one of that is fusions, or I can say SMR, small modular reactors. Our technology about SMR or fusion is at least 5 or 10 years ahead from US, because very traditional, very kind of unfortunate matter happened in US that is called 3 Mile incident, 1969 or something like that, and they have to stop the kind of R&D on nuclear fusion. And then in Europe case, there is a big oil discovery over there, so they can stop the R&D of fusion and nuclear. But in Japan, last 30 or 40 years, we have spent more than several $1 billion on R&D on fusion and nuclear. That's the reason why our technology is super ahead from the US.
Is that also a consideration of the needs of energy in the future, how you're trying to leverage the infrastructure build out of an age where we're going to use more energy with artificial intelligence?
Exactly. So there's a strong following wind on nuclear fusion. And then 2 years ago, something like that, U.S. government for the first time to decide to subsidize the industries, especially for startups. And then at the same time, we are clearly seeing the rise of AI, and AI eating power so much. And right now, I can say is that human beings and AI competing the power right now. So there's a clear need on that. So that's the reason why U.S. and even Chinese government strongly are driving the fusion and the nuclear development, I can say.
Shohei Yamada, good to have you with us here in the Tokyo studio before you head off to America to set up that fund, of course, partner at SBI Investment. And of course, if you want more on Japan Ahead, every Monday at 8:40 a.m., you can watch it here in Tokyo. Subscribers can watch live on the terminal using the TV Go function as well. This is Bloomberg.
Let's get you caught up to date with some of the corporate headlines that we're following. In fast fashion retailer Shein's profit reportedly slumped by almost 40% last year. According to the Financial Times, the retailer's net income slipped to $1 billion, even as sales jumped 19%. A source told the newspaper that the figures were internal projections before accounts were finalised. Shein confidentially filed for a London IPO back in June and is said to be under pressure, to cut its valuation to $30 billion. Berkshire Hathaway's operating earnings surged 71% in the fourth quarter, driven by higher interest rates and a recovery in its insurance underwriting business. Meanwhile, the firm's cash hoard grew for the 10th quarter in a row to a record $334 billion at the end of 2024. Warren Buffett also expects pre-tax losses of approximately $1.3 billion from the recent LA wildfires. One stock that we've seen moving to the downside and in fact testing those session lows at the moment is WiseTech, as we've seen the resignation now of most of its directors there and really kind of putting the focus when it comes to the ex-CEO's future, given that we've had that trading halt before that update on governance as well. It could be seen as something of a victory, I guess, for the founder and largest shareholder Richard White in that high-level power dispute. For more, let's bring Bloomberg News business journalist Angus Whitley. And Angus, there are so many threads to this story, and of course some of it have been splashed all over tabloid media as well. But what is the latest that we know in terms of what is, a pretty extraordinary development for an Australian board here?
Yeah, morning, Haidi. You're right, an extraordinary turn of events this morning. We knew that the board was deep in a governance review and an examination of behavioural standards at WiseTech, and this, of course, stemming from a string of allegations against former CEO Richard White, who was forced to step down in October. We thought, Richard White was under pressure to hold on to any kind of position at the company. But what we've had today is news that 4 of the 6 directors at WiseTech are out, and they will step down on Wednesday. And White, the same day, will present the company's results. So, it looks like a victory over talent, over corporate governance standards. Stock is telling another story. The stock is down as much as 22% in Sydney. Now, some of that is because the company issued guidance this morning saying that revenue would be, at the lower end of the guided range, partly because of product delays tied to the doubts around Richard White's role at the company. So it's difficult to isolate, how much is due to White's position at the company. Is there any concern that White is still there? Not really very much. From in the eyes of investors, at least, they're happy that White is there. He is arguably WiseTech's most valuable asset. He's the sort of heart and soul of WiseTech. He's the founder. He's the largest shareholder. So important in their eyes that White remains their company. Probably more important than any sort of doubts about corporate governance standards and disintegration, let's face it, of the board this morning.
Just an extraordinary story that we continue to follow. Quite a bit of downside there in WiseTech trading this morning. Bloomberg's Angus Whitley with the latest on that as it continues to unfold. But take a look at how the rest of these markets are trading. We are, just about an hour into the start of the Monday session. We're seeing broad downside there when it comes to Australian stocks, off by about 0.8%. Continuing kind of that correction as we had those record highs just about a week or so earlier. The Aussie dollar, as the dollar has been trading quite mixed.
This is the Asia Trade. We're counting down to Asia's major market opens and some reaction perhaps to the German federal elections, Haidi, where we saw the Conservatives winning, gaining ground, and also the far-right group gaining more ground than expected. We will be watching the euro today, which strengthened, of course, after the vote.
This is really a theme that we've continued to see reflected in elections across the globe over the past year or so, right? And kind of to set up that warning as well for other elections that to take place, including here in Australia. But of course, Shery, as you allude to, comes at a pretty difficult kind of time of existential challenge for the broader EU to see if this German coalition can have that kind of leadership to navigate a lot of these threats coming from the Trump administration.
And we have seen, of course, the ECB continuing to ease, and that really reflected on the euro-yen cross as well, where we're seeing that dip in the euro-yen in the price of the euro against the Japanese yen, and really a lot to do with, of course, a BOJ tightening path as well. MLive colleagues now looking at the 155 level for more euro-yen bears to actually get in the game, and this coming at a time when Japan is away on holiday, so we could see a lot more volatility and trading on that front. We're seeing the Kospi now come online to the downside of 0.7%. Of course, another big topic to watch in Asia this week will be the Bank of Korea expected to ease rates and resume its easing cycle. We are expecting that decision to come on Tuesday for a cut. We are also watching the Bank of Thailand make its decision this week as well. The Korean won holding at that 14.36 level. We have seen the highest level for the Korean won against the US dollar in about a month or so, Haidi.
Take a look, Shery, when it comes to just about an hour or so into the start of trading here in Australia, we are seeing some pretty broad downside when it comes to the ASX at the moment, about 0.7%, but we are kind of off those session lows. We're seeing those losses being led by the likes of mining, also heavily in the tech space as well. We've been talking about the WiseTech story that continues to play out. That's been falling the most by about 23% at one point, the biggest decliner when it comes to the benchmark, after 4 out of its 6 directors said that they would be leaving the freight software company, as the founder's Richard White's position continues to be a source of consternation. The Aussie dollar is trading at 63.68, some mixed trading there within that G10 space for the US dollar, and we're also watching Kiwi stocks in particular experiencing their worst day in 2 years, being dragged down really by one company, a communication services company, on account of some missed earnings expectations. Shery.
Haidi, let's delve deeper into the markets. Our next guest says that uncertainty about the Fed's policy and Trump's tariffs will continue to rattle markets. Let's bring in Vasu, Menon, Managing Director of Investment Strategy at OCBC. Great to have you with us, Vasu. Despite, of course, the headwinds, we have seen really those gains for U.S. markets. Perhaps not so much in the last trading session. Could we expect sort of a shift away from U.S. exceptionalism and even perhaps towards the likes of not only Asia, but also Europe, now that we have seen the results of the German elections as well?
Absolutely right. I mean, I think you are seeing a shift take place. If you just look at how the major indices have performed year to date, the MSCI US index is up, I think, close to 3%. The MSCI Europe index is up close to 11%. And the MSCI China index is up by, close to 18%. So clearly you're seeing a shift in some money moving out of the US market, where valuations are a bit more stretched, into other regions like Europe, China, and Asia, Japan. And this could continue. This could continue for a few more weeks, maybe even a few more months. Wouldn't be surprised if that happens because of, uncertainty about Trump's tariffs and policies that could rattle markets. And things are also looking better in Europe with what's happening in Ukraine. So I suspect that it's going to be a tale of two halves. The first half, lots of volatility, a bit of rotation to non-US markets. But in the second half, when Trump starts focusing a bit more on tax cuts, because he's talked about extending the current tax cuts, then the focus could come back to the US market once again. So I think this year looks like it's going to be a story of two halves. First half, non-US markets. Second half, a bit more US markets.
Well, the potential of an overheating economy, given, of course, all of the policies that you mentioned, including tax cuts, could that derail and any future gains that we could see in the U.S. stock markets, given, of course, how high valuations are at this point as well?
Well, certainly that's a possibility. I mean, inflation expectations have gone up. Inflation may go up. But I think our view is that even if inflation goes up modestly, that is going to create volatility in the short term. But I think if you're a medium-term investor over the next, 2 years, 3 years, I don't think it's going to derail the markets. It's going to create volatility, but it's not going to derail the uptrend in the markets. Now, if you cast your mind back to what happened during Trump 1.0, inflation did pick up because of his tariffs, partly because of his tariffs, from 1.6% to 1.9%. Despite that, if you look at the 4-year tenure of Trump 1.0 when Trump was in charge in his first presidency, the stock markets actually did fairly well over that period. 2018 was an exception, but over a 4-year period, it did fairly well. So I think the markets can absorb a little bit of inflation. So we don't see hyperinflation. We see inflation potentially picking up, but not enough to derail the markets.
Vasu, I wanted to get your thoughts on China and Hong Kong. Hong Kong equities in particular, right, has seen a real revival, and part of that has been the DeepSeek AI, the Alibaba sort of story as well. And taking a look at this chart, they're making good headway. The Hang Seng Index is near the sort of the halfway point back up to the top. We've seen, 48 weeks of inflows into Hong Kong when it comes to mainland investors that have been net buyers of Hong Kong stocks. Do you think this is a real revival? How much further does this have to go?
Well, I wouldn't be surprised if it's got more legs and we could see more upside for the Hong Kong and Chinese stock markets. As it is, we talked about earlier about rotation out of US markets into non-US markets. And one of the beneficiaries of that rotation has been clearly Hong Kong stocks and Chinese equities. Of course, helped by the expectations that the Chinese government would announce more stimulus in the coming months. I think March is when the next NPC is going to be held. Next month, that is. And markets are waiting in bated breath to see what is announced by the Chinese government. And on top of that, you've got Xi Jinping, warming up to corporate leaders for the first time in many, many years. And all that has improved sentiment. And this could continue for a while more, on the back of the rotation from US markets into non-US markets, at least for a few more months.
Where do you see the best opportunities in terms of really having a decorrelation with the global trade risk?
Well, I think essentially if you look at companies that are more domestic-oriented, to some extent even financial stocks, they've done extremely well year to date. I mean, that's one sector to look at. I think, the focus really should be more on companies that are more domestic-oriented, companies that are in larger markets like India, Indonesia to some extent. We're not negative in technology. We think that, it can be decorrelated to the tariff war. We think that, the structural story for technology is still there. And, tech stocks could actually do fairly well in the medium term. So there are still opportunities, but I think more domestic, at least for now. And even in the tech space, we're not negative. We think that, yes, there's a bit of volatility right now, but it's a buying opportunity because the structural story remains intact, irrespective of tariffs.
Vasu, always great to have you with us. Vasu Menon, Managing Director of Investment Strategy at OCBC. More ahead on the Asia trade. This is Bloomberg.
Wir, die CDU und die CSU, die Union.
We, the CDU and the CSU, the Union, we have won the 2025 federal election. The world out there will not wait for us, and it will not wait for lengthy coalition talks and negotiations either.
Germany's conservative opposition leader Friedrich Merz speaking after projections suggest his bloc won Sunday's federal election. Merz's alliance is expected to finish ahead of the far-right AfD party and Chancellor Olaf Scholz, Social Democrats, which saw its worst results since World War II. Let's bring in Bloomberg's Oliver Krug, who joins us now from Berlin. Oliver, so how consequential are we expecting these results to be, not only for Germany, but for the rest of Europe as well?
Yeah, so listen, we're really at a crossroads for Europe, more broadly speaking, but also Germany as a whole. I would say that the outcome itself was largely what was expected and what we saw from the polls that basically were unchanged since the month of November when this government collapsed for the very first time, which was the CDU leading sort of commandingly with about 30 points, about 30% of the vote, which is basically more or less what they got. And the far-right Alternative for Deutschland with the second position there with about 20% of the vote. And the real question was more about the smaller parties parties. And the question being now, as they sort of look at the landscape of these votes, and they're literally counting the last sort of thousands of votes now, and actually it will come down to the thousands of votes to figure out basically whether Friedrich Merz will have to go into coalition with one or two parties. What he would like to do is go into ideally a coalition with one other party, the SPD. It is not clear yet. We're going to find out in probably the next 30 minutes whether or not, in terms of the mathematics of this parliament, that is going to be a possibility, and that is going to be sort of the most consequential thing we're going to be watching out for the next couple of hours here. What we should also say is that for Friedrich Merz, he's saying there is no time to waste for Germany. This much is true, but in German timelines, in terms of politics, that means that he hopes to assemble a government in the next 2 months, right? And when we think about the sort of political timelines that we're talking about here, Donald Trump has been president for 1 month in the United States and probably has done more for foreign policy in Europe than in a very long time. For Germany, the largest economy in Europe, to be without a government for another 2 months is not really an ideal situation.
You've alluded to some of the, Euro-wide challenges there, but what will be the top priorities when it comes to the new coalition government?
So listen, I think that one of the sort of main issues for the German economy and the European economy more broadly is, the fact that they've been in contraction for 2 consecutive years, right? This is something that has not happened really very often in Germany. Germany's experienced a great deal of growth over the last couple of decades, but their business model and their sort of whole economic model has gotten very jolted by the war in Ukraine, the energy prices, and the fact that in China, for example, everything from labor costs to, export markets has done a lot better than the German model has over the last few years, and they're really in search for that new economic program to try to revive the economy. So I spent the evening at the CDU headquarters. I caught up with one of the senior lawmakers there at the CDU, Jens Spahn. Here's what he had to say about what their priorities are going into office.
We do have a very clear mandate. Friedrich Merz will be our next chancellor in Germany. Olaf Scholz is done. And that's the good news of tonight. And we're going to change course of Germany. We will bring back growth. We will end illegal migration. We will meet our security needs, especially regarding to NATO goals. So yes, that's a clear mandate for a change of policy.
And I think for most market observers, the question about how exactly they're going to treat the economic problems and if they are willing, this is a sort of historically fiscally conservative party. This is the party that brought the debt brake, the very strict borrowing limits that exist now in the German constitution, brought it into the constitution back in 2009. The question is, are they going to be willing to be more lax on some of those rules to try to stimulate the economy? They're probably going to have to expand some of their borrowing just to meet some of the defense requirements that are all the more urgent now with the sort of Trump administration in the United States, basically, suggesting that they may not be able to backstop or be willing to backstop European security for much longer.
Yeah, Oliver, we have seen, of course, the latest estimates coming from the European Union about Trump's steel and aluminum tariffs hitting Europe, costing, 28 billion euros of the bloc's exports. How is the European Union and Germany in particular factoring in the uncertainty coming from the Trump administration?
Yeah, we should say that when we talk about all of these sort of trade issues between the United States and the EU, and we're talking about a trade relationship that is absolutely enormous, that basically any sort of tariffs that go up against the EU, that hits Germany more than anybody else. And in fact, most of the sort of trade imbalance that exists between Europe and the United States is concentrated in Europe. And what the Europeans are facing down the barrel of, it's not just the aluminum and steel, which again would hit Germany the most, it is the auto industry. And we have heard from Donald Trump repeatedly over the last couple of months talking about his dissatisfaction with the sort of trade balance, particularly for cars. And Germany is looking at potentially a 25% tariff from the United States for many of the cars that they export over to the United States. And that would have an absolutely huge sort of consequence for the economy. As we were just talking about, it's contracted for 2 consecutive years. If you get tariffs on the auto sector, you almost guarantee a 3rd year of contraction in Germany. And just to put that into perspective, that has never happened. You basically have never had 3 years of consecutive contraction since the fall of the Berlin Wall. So these are sort of really historic moments here for Germany in trying to assess what they're willing to do to try to bring this economy back. And as you allude to, they're sitting across from the table from somebody who is basically called the EU taking worse advantage of the United States and some of their enemies. So again, there's also this question of the sort of leadership vote at the center of Europe. Could Friedrich Merz be that figure that steps up to lead not only Germany, but to lead in Europe where others have failed to do so, namely Emmanuel Macron?
Bloomberg's Oliver Crook there in Berlin. Let's take a look at how futures in Europe are opening after we saw initial upside when it comes to trading in the euro, and that could sort of continue until such time that we might get a bit of concern over how long this coalition government will take to be established. Right, we are seeing Stocks 50 futures off by about 0.2% at the moment. German DAX futures are looking largely unchanged. We have seen, of course, this in the backdrop of what has been a European stock market boom, right, up almost 10% this year, really breaking new ground when it comes to the stock Euro 600 index there. So a lot of strategists having to revise their expectations. But that diversification out of the US, the betting on a ceasefire in Ukraine have been some of those drivers over that optimism. Well, Ukraine's President Vladimir Zelenskiy says he's ready to step down as president if peace is guaranteed.
To achieve peace, if you really need me to give up my post, I'm ready. I can trade it for NATO membership if there are such conditions. I am focused on Ukraine's security today, not in 20 years. I am not going to be in power for decades.
Mike's Michael Heath joins us now. So in exchange for peace and NATO membership, but of course, Ukraine can't hold elections under martial law either, so this has been sort of a long tussle in terms of what Russia has asked for.
Yeah, I mean, I think Volodymyr Zelensky is a very smart politician, and it's quite a sensible thing. I mean, if we just go back to when he was elected, he was actually elected on a platform of bringing an end to the conflict with Russia, which was at a low level at that stage because Ukrainians were tired of it. And I don't think he's ever envisaged himself as a war leader or you know, a dictator. I mean, he's not Vladimir Putin. He's not going to be there for 25 years. But it's a good way of blunting also President Trump accusing, you know, who's been sort of running these Russian lines about Zelensky as a dictator with a 4% poll rating, which is untrue. It's more than 50% support that he's got. But it is a good way of saying, look, I'm not here for the long term, and I'm just here for Ukraine. And he's right. I mean, look, the notion that if you could get Ukraine into NATO, you could actually resolve a lot of these issues, and I'm sure he would be happy to go. But you can't hold an election under martial law legally, but you can't hold an election when you've got fighting on the front lines. I mean, you know, as I mentioned last week, Britain during World War II didn't hold an election for 6 years because you just can't do it. So it's sort of an absurd situation, and this idea that Russia's pushing this, that Ukraine should hold elections because it's a dictatorship, coming from a country where the elections are almost farcical, it really does make the mind boggle. So. Yeah, I mean, look, very, very clever by Zelensky, and I don't doubt the sincerity of it, that if NATO was on offer and they said, you know, there will be peace, but you need to walk away, he'd do it in a flash, I'm sure.
We are expecting the US to put forward a UN proposal when it comes to the plan to end the war, and at the same time, you're continuing to see indications that the support is being withdrawn, right? Hegseth, Mike Waltz, the National Security Advisor, refusing to name Russia as an aggressor.
Yeah, I mean, on one hand, it's sort of unpleasant to read, isn't it? Because it's just so obvious that Russia was the aggressor, and the historical record will show that. What they seem to be trying to do, though, is that the US is trying to jumpstart talks in this, and they want to bring Russia to the table, and labelling Russia the aggressor, labelling Russia all of these things doesn't really help that process. So there is a bit of politics behind that, but it is disturbing to read a US presidential administration not just to call a spade, that Russia obviously did invade, and that you know, as I mentioned, that Zelensky was elected trying to put an end to the conflict, not for it to turn into a full-scale invasion. And the Biden administration also worked very hard to try and avoid this too. So it is a little bit disturbing to see. And then on the other side, we sort of have these negotiations over the payments to the US for its support too, which is another issue that's sort of floating along now as well.
Yeah, as part of that payment, the Trump administration trying to get a cut of Ukraine's mineral wealth. How's that going?
Yeah, well, Shery, it does seem like things are evolving, but again, you know, President Trump has sort of said that the US that this fund should be $500 billion, that a fund should be created, you know, sort of that holds Ukraine's mineral wealth and infrastructure and reconstruction, that sort of thing, just and it should be about $500 billion because that's what he estimates that the US has given Ukraine. Now, President Zelensky has sort of estimated that it's more like $90 billion that the US has provided, which is still a lot of money. but still it's obviously less than a fifth of what Trump's talking about. And given President Trump does tend to pluck figures out of the air kind of thing, you suspect it is probably closer to 100 billion around that mark. But again, we've sort of still got these same issues that the US is saying, seems to be arguing that, in having this economic involvement, the implication is that there's security backing for Ukraine there. But President Zelenskiy, he's reasonably wise there. He needs something a bit more robust in terms of a security basis for that goes along with this sort of fund. And he also can't mortgage Ukraine's future. I mean, $500 billion is a huge amount of money. Ukraine has to be rebuilt as well. The idea of handing that over to the US, it sort of isn't really feasible. How are you going to build Ukraine? How are you going to pay the US back? This is a country that's basically bankrupt now, due to Russia's invasion and bombardment. So it's a tight corner for him in. Some of the US officials do seem reasonable about this, and there is a bit of toing and froing. So we just have to see how it plays out.
All right, Bloomberg's Michael Heath there with the latest on the conflict in Ukraine. We have more ahead on the Asia trade. This is Bloomberg.
Some of the latest corporate headlines that we're following, and WiseTech shares are down after its founder and largest shareholder, Richard White, appears to have triumphed in a high-level power dispute. Almost every board member have now quit in a disagreement over White's role at the company, including its chairman. White was forced to step down as CEO in October after a string of misconduct allegations. Fast fashion retailer Shein's profit reportedly slumped by almost 40% last year. According to the Financial Times, the retailer's net income slipped to $1 billion, even as sales jumped 19%. A source told the newspaper that the figures were internal projections before the accounts were finalised. Shein confidentially filed for a London IPO back in June and is said to be under pressure to cut its valuation to $30 billion. Well, Shery, we have been watching these Berkshire Hathaway numbers from its earnings, and we saw that operating profit really jumping on the back of the insurance business, on the boost that we got from interest rates as well. Operating earnings surged 71% in the first quarter when it comes to that higher rate environment, the strong recovery in insurance underwriting side of the business there as well, which the insurance investment income jumping 48%. The cash hoard, that's a number that we're always watching out for, a record $334.2 billion. But there are some expectations when it comes to about $1.3 billion pre-tax in terms of losses from those recent wildfires. The other interesting sort of piece was also the massive tax bill as well. Another record tax bill. Warren Buffett saying that Berkshire has paid the US government more than $101 billion in taxes since he took the helm 60 years ago.
Yeah, and here in Japan, we've been watching Berkshire Hathaway very closely, right? Especially when it comes to their investments and stakes in Japanese trading houses. Well, in the annual shareholders letter as well, Berkshire Hathaway saying that they want to increase those investments in Japanese trading houses over time. Now, they had initially agreed to keep their holdings in the companies below 10%, but now Berkshire Hathaway looking to increase over time because they want to keep these shares for a very long time. The trading house is also agreeing to relax the ceiling, quote, moderately as Berkshire approaches the limit. And you can see right there how the Topics has reacted to Berkshire declaring for the first time that they had stakes in those 5 Japanese companies, including Mitsubishi, Mitsui, Itochu as well. We have seen that run up, of course, in Japanese equities over the past year. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at what we're watching when it comes to Australia. About an hour and a half into the start of the trading session. Pretty risk off as we see the ASX 200 off about 0.25%, but still actually off the session lows that we've seen so far. Tech has been the biggest drag, with, of course, WiseTech falling by as much as 23% after the board member resignations. We're also seeing downside in energy as well as materials. Well, Australian Treasurer Jim Chalmers is in Washington this week to try and win exemption from US tariffs. Paul Allen joins us now for more. And we had initial, pretty okay sort of conversation, but the government could use a good win here.
Definitely could, particularly when it comes to blue-collar workers, because there's going to be an election in Australia before May the 17th. It hasn't been called yet, perhaps because the government's not polling very well right now, on track to be a one-term government, which would be quite humiliating. So it's important that this trip goes well for Jim Chalmers. And Australia is in a unique position in that it does have a trade surplus with the US. Not many countries have that. But the US senior trade advisor Peter Navarro sort of complicated things last week when he said Australia is killing aluminium market. Now, when you peel the layers off that, it doesn't make a huge amount of sense. The government data in Australia shows that just 2.4% of Australia's aluminium went to the US in 2024. And then we have the Rio Tinto CEO, he waded into this debate as well, saying, look, the US asked Australia to boost aluminium shipments after the outbreak of the Ukraine war to replace Russian aluminium exports. So on top of that, Australia's got a very large pension industry, $2.6 trillion. A fifth of that gets invested in the US as well. So Jim Chalmers has got some compelling arguments to put when he gets to Washington.
There's also sort of geopolitical concerns at the moment with these Chinese warships.
Yeah, this happened last week. 3 Chinese warships in the Tasman Sea, which is just over there. They were live firing on Friday and Saturday. It caused a few commercial flights, passenger flights between Australia and New Zealand to be diverted. The Prime Minister, Anthony Albanese, said, look, China was operating within international law, but it would have been appropriate to give more warning. China has not responded very well to that, saying that is inconsistent with the facts and is accusing Australia of hyping it up. Now, the opposition here, meanwhile, is going a lot further. It's accusing China of gunboat diplomacy, and there are some questions about what China's even doing there, right? The Tasman Sea's a long way from anywhere. Apart from Australia and New Zealand, there are no other countries in the neighbourhood. The former senior defence official, Michael Shoebridge, had some compelling analysis on this. He said, look, there's no rational reason for the PLA to be there. The only reason would be to send a message of intimidation, aggression and provocation.
Bloomberg's Paul Allen there. As we continue to watch the markets, of course, we have Japan away on holidays, but the offshore yuan right now trading at that 725 level against the U.S. dollar. We have seen some weakness in the previous week, but we're holding steady at that 725 level as the U.S. dollar overnight and over the weekend saw some downside pressure. And this, of course, as we had those elections in Germany with the conservatives gaining ground and the euro strengthening after the election results, we actually saw a little bit of pressure for the U.S. dollar. The Japanese yen continuing to strengthen against the U.S. dollar. It gained more than 2% last week. Governor Ueda talking about how officials would respond to a sharp rise in bond yields with nimble asset purchases at a time when we've had the 10-year yield around levels that we haven't seen since 2009 or so. And you can see the euro continuing to strengthen against the U.S. dollar. And we continue to watch, of course, all to do with tariffs and the Trump administration now said to be turning up the heat on Mexico to place their own duties on Chinese imports as part of their efforts to avoid threatened duties from the U.S. Let's bring in our Chief North Asia correspondent, Stephen Engel, on Hong Kong. So, Steve, we have seen Mexican officials try to crack down on cheap Chinese imports already. So what are we expecting Mexico to do given these additional threats coming from the Trump administration?
Well, we've seen moves by the Mexican President Sheinbaum to appease some of Trump's concerns, obviously, but the issue is quite wide, obviously, with the flow of fentanyl, according to the White House, as well as the flow of illegal immigrants, and then also Mexico being able to potentially, import cheaper goods from China and then export them to the United States. That's why there's this specter of tariffs on Mexico as well as Canada that got a reprieve on February 1st by 1 month. And that 1-month reprieve ends essentially by this Saturday, March 1st. So there are some fairly closed-door meetings, if you want to call them negotiations, going on. There is a Mexican delegation in Washington, D.C. right now, and sources are telling us this is where the U.S. proposed or told Mexican officials, including their economy minister, Marcelo Ebrard, that they, Mexico, should put their own tariffs on Chinese products coming into that country as part of their efforts to avoid those threatened 25% tariffs coming potentially from the United States. So we're hearing from those sources again, and it has not been confirmed by the Commerce Department or other U.S. officials or even the Mexican side. But Howard Lutnick, the new Commerce Secretary, was among those U.S. officials, as well as the USTR, the Trade Representative's Office nominee, that's Jameson Greer, as well as White House Economic Advisor Kevin Hassett, attended those discussions. The only thing we heard really from the Mexicans was a post on X from the Economic Minister of Mexico saying that the meeting was the start of a constructive dialogue, quote unquote, and that this joint work group that they've decided to form to maybe tackle the issue of trade and tariffs would begin work Monday.
We've also heard that Trump has been boosting the authority of CFIUS. How sort of strong is this weapon when it comes to restricting further Chinese investment across these sensitive areas?
Well, I think Trump wants to give it more muscle. CFIUS, that's the committee, of course, that reviews. It's kind of a, I wouldn't say it's secretive, but sort of a closed-door panel that reviews foreign entities' pursuit of M&A in the United States. And Donald Trump on Friday essentially signed the National Security Presidential Memorandum. It commits to using, quote, all necessary legal instruments to bar Chinese affiliates from investing in U.S. technology, critical infrastructure, health care, agriculture, energy, raw materials, and other industries. And Donald Trump went on to say, essentially, that the PRC-affiliated investors are targeting the crown jewels of U.S. technology, food supplies, farmland, minerals, natural resources, ports, and shipping terminals. And he essentially said that that China bars the United States from investing in key strategic industries in China. So why shouldn't the United States do the same thing? The U.S., according to this presidential memorandum signed Friday, also will consider new or expanded restrictions on outbound investment to China. That could be and should be a hot topic in the upcoming events that are going to be held in China, starting next week with the National People's Congress, the annual session of Parliament in China, where they will obviously be discussing and crafting a policy response for the Chinese economy to the threat and the existing tariffs, of course, on China. But also, a few weeks after that, the annual China Development Forum will be held behind closed doors at the Diaoyutai State Guest House. In years past, top U.S., the champions of U.S. industry, Tim Cook was there last year. Other big senior CEOs have gone there for that. It will be very interesting to see who comes this time and what those discussions are if we're talking about, decreased investment in each other's countries. As well as that, after that is the Boao Forum in Hainan. So lots to talk about over the next month and a half.
Our Chief North Asia correspondent Stephen Angle there with the latest. And this week also have special coverage into the arms race for drones. It's a competition that involves the US, its allies and China. Our tech reporter Annabelle Drillers explains how drones are set to play an even bigger role in warfare.
There's no question that drones have altered the dynamics of military operations. Unmanned aerial vehicles, or UAVs, have been in use for decades, including in the Cold War, Vietnam and by the US to strike remote targets after 9/11. But on today's battlefields, it's different, not least because of the sheer volume of UAVs in the skies.
The current war in Ukraine is very much a drone war already.
The situation has been mirrored in the Middle East, with Hamas and Israeli forces deploying UAVs extensively. It's a signal of what's ahead, with the US spending hundreds of millions of dollars to secure new drones through its so-called replicator program.
If there's a major power war, it's very much going to be a drone war.
Technology is moving fast, particularly as artificial intelligence is integrated into UAVs.
Air superiority in a future conflict is not just going to be about fighter jets. It's going to be about drone swarms and loitering munitions and AI-powered targeting systems.
There's also a question of quantity, as military forces need to procure large numbers of less advanced drones. This has been a weak spot for the US and its allies.
US and many European states, they've actually for a long time been investing a lot more in the sort of more sophisticated long-range drones that have lots of sensors to them. It's really the mid and lower end stuff that they're trying to build up numbers, because as we've learned from the Russian-Ukraine conflict, the numbers do matter.
But China is the leader in commercial drone production, with its firm supplying around 80% of the global consumer UAV market. And Beijing has long seen these as a dual-use technology.
They've been real pioneers in cheap commercial drones, which can be adapted for military use.
It's clear that this is an area where China is putting intense capital, but also policy focus. I think the Chinese recognized quite early that drones could be the difference between victory and defeat.
Now Beijing's rivals are racing to catch up.
Right, Annabelle now joins us from Hong Kong. So, Belle, we just saw how China dominates in end sales of UAV. So how has that impact been felt in other ways?
Yeah, well, it's really developed into a challenge for the US and its allies, Shery, because there's a push today, and we just heard it there, but there is a push from the US, allied countries, to develop drones that don't include Chinese-made parts. But it's really not easy to do, and there's some really great research that's been done into this, including what was published in the MIT Technology Review last year. But it essentially breaks down the different components of FPV drones. Now, FPV drones, that's first-person view drone. This is a type of drone that's been used extensively in Ukraine. It essentially puts the drone pilot in the cockpit, whether they're wearing goggles or seeing some sort of live video feed. But if you're looking at the different components here, and there are more, of course, around 14 or 15 that they delved into, but you can see there's a very clear story here where the tech originated in the US, Japan, Europe, other places, but today is predominantly produced in China. And DJI, for instance, being the world's biggest maker of drone technology, the challenge now is to start to replace those parts, because this is really the push from the US and other places now to have drones that don't include Chinese-made components, that push to then build up other types of manufacturing bases. When China has not just the dominance around manufacturing, they've also, through developing and manufacturing over a period, have developed the ability to produce at scale, at low cost, with expertise. And so that is really the challenge that a lot of places are facing now, and why we're going to be heading to Taiwan this week, because Taiwan has a push to develop its own homegrown technology in this area to completely remove China from its supply chains, and also to build partnerships with the Baltic countries. We're already seeing that at places that border Russia. They're also looking to partnerships across Europe with the US, of course, to be able to build out new technology, and technology, again, that's away from China.
Yeah, looking forward to that coverage out of Taiwan. Annabelle Drewlers there. We have more ahead on the Asia trade. This is Bloomberg.
Let's take a look at what we're watching. We're just about 45 minutes into the start of the session when it comes to trading in Korea. At the moment, about an hour and 45 minutes into the start of trading as we watch Australia. Asian equities are broadly slipping there. We've seen some of that sort of risk aversion after Wall Street had its worst session in a year due to pretty lackluster US economic data. We're seeing the Kospi off by about 0.8%. Australia is actually off those session lows, just about 0.25%, really largely being pulled down by tech, and that's WiseTech in particular, which was falling by about 23% at one point in the session on this board resignation messiness that continues to play out. We have been looking at emerging market stocks, though, because some of that dollar reprieve story has really brought the interest of global funds back into EM Asia. Earnings projections continue to improve. Investors really buying Asian EM stocks as that dollar rally slows. Trump's tariffs are perhaps at this point less severe and less impactful than expected. We did see the MSCI Asia Emerging Markets ex-China Index rising 1.8% last week. Across the region, some of these equity opportunities are being seen as being relatively cheap. They're trading at around 15 times forward earnings estimates, Shery.
Yeah, this at a time when we're seeing more really souring of corporate profit outlooks in America, right? So it's interesting how we're shifting the focus away from the United States, where the S&P 500, for example, has barely gained ground 0.3% since President Trump took office. On the other hand, we have seen the Nasdaq Golden Dragon Index, for example, soaring about 18% since then. So this bigger focus now on China, where valuations are cheaper, has been a new place of interest for investors. Now, Chinese state-backed developers starting to buy land at a premium again after the government eased limits on home prices to revive the housing market. For more, our China correspondent Mingmin Lo joins us from Hong Kong. So, Mingmin, is this a sign of the real estate sector potentially bottoming out?
Hey, Shery. Yes, I think we are seeing more signs of the real estate sector bottoming out. If you look at home prices, for example, it declined by 0.07% in January, so barely declining at all. And if you look at those land sales being sold at a premium increasingly this year, more than a third of the land transactions this year are being sold at more than 20% premium, most of them bought by state-owned developers. And this is compared to just 14% last year, so a pretty big bump there, which shows that real estate developers are starting to be a little bit more confident about the rebound in the sector. They are also, despite the sales slump so far this year, 7 out of 10 such transactions are by state buyers, and this comes after the pretty strong signals that we have seen that the government is prepared to step in to rescue or to support some of these state-backed developers like Vanke, which has been facing a liquidity crisis. The real estate developers also likely responding to changes in government policies, given that more than many of the cities in China since the second half of last year had started scrapping these price guidances for new homes, which were meant to put a cap on real estate developers' profits. So that has led to, these developers starting to come back in to buy houses at a premium. And so we're likely to see maybe things stabilize. It's good news ahead of the National People's Congress in March.
We've also seen another element in terms of what potentially is worsening the broader liquidity strain across developers.
Yes, local governments are expected to issue about 1.7 trillion yuan of special bonds in the first 2 months of this year alone, which is an unprecedented amount. Half of that is going to be dedicated to swapping out local government hidden debt. And if you recall, late last year, authorities had issued this 6 trillion yuan fiscal stimulus to allow local governments to issue special bonds to swap out their hidden debt over 3 years. So it's a 2 trillion yuan quota per year. So what local governments have issued so far in the first 2 months of the year makes up about 42% of this year's quota. So they are really front-loading the issuance of those bonds to take advantage of the lower yields. And we're expecting more bonds to be issued later this year as well. And that's likely to mop up the liquidity in the money market so far.
Bloomberg's China correspondent Mingmin Lo there. Well, investors are warming up, as we just spoke about a little bit earlier, to the idea of EM stocks in Asia. This is partly due to the Trump rally, the dollar rally, I should say, taking a pause, and those initial Trump tariffs perhaps being less severe than expected. Let's bring in our Bloomberg Equities senior reporter Abhishek Vishma for more. So some of these elements, at least, are seeing a lot more investor inflows when it comes to Asian EM.
That's right, and China has been leading the way, but what we are talking about here in our story is emerging Asia, excluding China. These markets are also getting some sort of tailwind. A bit of foreign money has come in, about $700 million over the last few sessions in the cohort as a whole. And then, we are seeing some budding signs of weakness in dollar to an extent. And Trump's tariff and policies have been smaller and slower so far. So that is sort of making a case for a catch-up on in emerging markets, excluding China stocks, with China as well as US and global markets in general. They have egged out some marginal gains. The expectations are that in current setup, there are more gains that these markets will be making because as uncertainty goes down, there would be a bid for assets where growth outlook is better, and ASEAN and India, which probably command the biggest weight in emerging markets, excluding China again, are better poised to benefit from that.
What about rate differentials? The issue right now seems to be that the Federal Reserve could potentially continue to delay more easing given the potential of inflation being rampant with President Trump's policies, and then you have, of course, central bankers in emerging markets dealing with their own issues and having to cut.
That's right. But, if you look at Asia, Haidi, I mean, there are many nations who have actually cut rates. I mean, for Australia is the latest example in that matter. RBA's Michelle Bullock has gone ahead and cut interest rates last week. We have seen similar policies being pursued by New Zealand, even in the face of similar uncertainties from Fed last year. India is on the verge of carrying out its own cycle of rate cuts. So, all in all, it looks like there are certain pockets in the region which are better poised to manage rate differential cut rates, which are usually positive for risk assets such as stocks. And the whole setup is that is poised in such a way that there are few key events to be watched, pertaining to inflation outlook, pertaining to global economic growth outlook. First is obviously, the March 5th session of China's Congress, and then comes, what Trump decides in April.
Bloomberg Equity senior reporter Abhishek Vishnoi there. We have more ahead on the Asia trade. This is Bloomberg.
Let's take a look at some of the stocks that we'll be watching when markets open in Hong Kong and mainland China. We'll be watching some of these vaccine makers. Researchers at the Wuhan Institute of Virology saying they've discovered a new coronavirus in bats. That virus hasn't been detected in humans, only identified in a laboratory. Scientists say the virus enters cells using the same gateway as the one that causes COVID-19. Well, that is it for the Asia trade. Our markets coverage continues as we look ahead to the start of trading in Hong Kong, Shanghai and Shenzhen. The China show is next. This is Bloomberg.